Welcome, welcome, welcome. You're listening to the Ask Brien radio show on KTS 1220 and 98.1 FM. Well, as everybody knows, I say it every show, we started in January 2017. That's almost 8.5 years ago. And the second guest on the show became my co-host, Mr. Alex Grossman. Are you there?
I'm there, Peter. How exciting.
So you were there in the beginning. You were there in the beginning.
I was only a toddler then, back in those days, yeah.
You were an infant. Now we're like in third grade.
Sure, guys.
And some of the people... Did you say?
I said, sure, guys.
Yeah.
No,
yeah, I know.
nobody's buying that.
Nobody's buying that? Oh, bummer.
Oh, wise guy. All right, so we try each week to try to educate people. We usually bring in somebody that knows something about a specific business section. Could be taxes, could be Facebook, could be website design, could be inventory control, could be anything where you can learn something about your business. Or sometimes we'll have somebody that, hey, I started out on the kitchen table, and now I have 900 employees working for me, and I'm making $1 gazillion, okay? So we try to show people that have been successful. But today, the House of Representatives passed a huge, huge bill, and we're going to be going over that shortly. But before we get there and entice you, we want to understand, and Alex has some idea, but why is Brien spelled B-R-I-E-N? You know, most people that I know, Brien, B-R-I-A-N, B-R-Y-N, few people are spelling it B-R-I-E-N unless they're, from Ireland and their last name is O'Brien. But, I mean, why do you have an E in Brien? I mean, it doesn't make any sense to me.
Doesn't make any sense to me either, but I'll try to give you some idea. I think the first idea is because you have this brilliant engineer working for you.
Aww.
Not for me, but for us.
Thank you, Alex. Yes. Dual purpose. Happy to be here.
Right. And what happened to
There we go.
Exactly. Another E.
I think that Ask Brien always, as you said, is really all about education. Educating people about great things that they have to do to make their business successful.
That's right. Our motto is, we are the Sesame Street for business.
Oh, you definitely are. And everybody knows that you have a serious amount. Right? Oh, yeah, you have a serious amount of Big Bird in you. There's no doubt about it. I mean,
I'm definitely as tall as he is. I'm almost 5'5". That's huge. Of course, you always say I'm Bird and Ernie, but, well, whatever.
Well, there's a little truth to that, yes.
Although my nickname is the Penguin, so I don't know where that fits into Sesame Street. But having diverged, as we always do, what are the other reasons why we have Brien spelled B?
Well, I think really what Ask Brien does, it brings out excellence in people, and it really brings out the entrepreneurial spirit. Entrepreneurs are really important, aren't they?
Well, they always are, but I always hear when I'm listening to the show that they're going to have an expert on. What is an expert? What does that mean? How do you qualify that?
Well, I think you can qualify in a very simple way. It has something to do with hours and time and work. Well, how do you do that?
Well, you're asking me for the algorithm. I guess you are. So when you figure this out,
Hold on, I'm getting my pen ready. Go ahead. I got to write this down. Okay.
There's an E in pen, by the way, right? So, but that's not the E we're talking about. There's an E in pencil if you use that. The reality is, we figure out that most people need 5 years to do something before they have a pretty good idea of what they're doing. Now, obviously, you have naturals. Naturally, you have people that take a little long. But the average person takes 5 years of doing one thing, and after they've done something for 5 years, they pretty much know the ins and outs. They've been through the ups and downs, the problems that have happened, and they've been able to solve many of them. So we usually use a 5-year category. Well, for 5 years, we determine that the average person works 40 hours a week. And with 2 weeks off a year, you're working 50 weeks. That's 2,000 hours. times the 5 years that it takes is 10,000 hours. So we calculated out backwards that it takes about 10,000 hours to really become an expert in something. And if you have 10,000 hours, then you classify it as an expert. But because most entrepreneurs or people that are starting a business can't survive by working, 40 hours a week. I mean, like Alex, you have a new business. What do you work, about 14 hours a week?
Yeah, I think I worked 40 hours the first 2 days of this week. Yeah, it was pretty good. Not too bad.
Exactly. So, Alex, you could probably become you probably were an expert in 1 year.
Oh, yeah. Easily.
Absolutely. Now, do you know what other E's there are?
Well, I think the most important one is your life, which is all full of empathy. You just have empathy for everybody, don't you?
Well, that's true. Ken always says, Peter, why are you so empathetic?
Yeah,
You're always caring about the other people.
You are just, you're just a peach. Yeah.
Yeah, right, Jen? Yeah. That's a hard one to get around, isn't it?
Yeah, it goes with his giant ego.
When she thinks of me and the show, she only thinks of one thing, how empathetic I am.
Oh, yeah, completely.
But Alex, you missed a big one, and it's very important.
I'm going to hold my ears at this point, but go ahead. Tell me that big one. Go ahead. Yes.
Well, ear does have an E in it.
Yeah.
But you mentioned something that to be really successful in life, right? You have to have a lot of enthusiasm in whatever you're doing, right? And
correct.
Enthusiasm is only part of it. The other part of it is you have to be excited.
There it is. There it is. Yes.
And at least it's over, Alex. We can move on now from that.
Yeah. Thanks. Yeah.
Well, if there's anything left in your ear, but we do have a big show today. It's not as big as the big, beautiful bill. I want to talk about ego. Think about this. The name of the bill is the one big, beautiful bill. Okay, it's not like the Tax Reform Act of 1842 or whatever. It's the one, the beautiful bill. I wonder where that came from. Somebody with a very small ego, obviously.
Obviously.
So, again, we're not a political show, so we're not trying to show fake news or real news or whatever. We just went to the actual bill that was approved by the House of Representatives. Now, a couple of things we want to point out. One of which is that when you have a bill that's passed, that doesn't mean it's the law. So you might have heard on your radio show, they passed no taxes on tips or no taxes on Social Security or they lowered the tax rates or whatever. Technically, yes, if this bill becomes the law as it's written, that'll be correct. However, there's a couple of hurdles that we have to get over. First of all, the way Congress is devised, we have both the House of Representatives and the Senate. And a bill has to pass both the House of Representatives and the Senate in the in the exact format. So what typically happens is, and what has happened here, is the House of Representatives today passes one big, beautiful bill. But the Senate, who also wants to get their, they want to have some input in the situation. They don't want to feel like left out. So what are they going to do? They're going to try to pass a couple of things that may be different. Now, if they were to pass this one big, beautiful bill, then it'll be that much closer to law, and the president could then sign the bill, which he has said he will do, and it would, in fact, be the law. However, most likely, the Senate also has an ego that's almost as tiny as mine, and obviously everybody knows what a tiny ego I have. And so they want to get their input in this bill. So typically the Senate will pass their own bill and won't do it exactly the same. That's going to take more time before the bill becomes a law. And then if there are discrepancies, differences, so if one bill says, taxes on tips for first $20,000, and the other bill says taxes on tips $40,000, well, it has to be determined which one is going to be the law. And so we go through, there's a process called reconciliation, where certain members of the House and certain members of the Senate will get together, and they'll make a determination to try to come up with a compromise bill on those areas where there are differences. And then that bill will become final after it's passed by both the the House and the Senate, and then actually signed into law by the president. So we're very, very close to the end, but whether or not the bill is going to be 100% like the bill we're talking about today is debatable. They may change a couple items here and there, and you might be hearing that in the news. But anything you've read today about how Congress has passed this bill, well, they have passed the bill, but that doesn't mean it will be the actual law that passes, although I would expect 99% of it to be the same way it is, but who knows? Isn't that right, Alex, Mr.
That's
law expert?
That's 100% right, and I was calling that 100%. I think most of our people are. I mean, we really care about how it affects small businesses, with this show. But I have a question for you on the timing. So this was passed by the House. How long do we assume the Senate is going to take to argue over this and get their spotlight to be able to make sure that they make those little changes that are just very important to them? What does that process usually take? I mean, if I'm a business owner, should I be worried today or be happy today, or should I, worry about what's going to happen in a year?
Well, first of all, it's not going to be a year because everybody's running for office next year, and so everybody has to make sure they pass something. So the way I look at it is, a bill will pass anywhere in the next 30 to 120 days. Okay, and the only reason why I bring up 120 days is if there's a lot of discrepancies, or if they pass something in the Senate that the House doesn't like, the reconciliation period could go back and forth a lot longer. But I don't expect it to. I would be shocked if this bill isn't the law by Labor Day. So, but how quickly that's going to happen? Now, some of the provisions are retroactive. What does that mean? That means they are retroactive, meaning they are going back to the first of the year. So, for instance, a good example of that, and a good one to start out, is the tip portion. A lot of people have been listening to the TV or wherever you listen to your news, YouTube, whatever, and they've determined that, oh, wow, there's not going to be any taxes on tips. Well, first of all, on the retroactive period, that is going to begin January 1st. They're not going to say, well, the bill passed on August 2nd, 2025, so therefore the law will be effective from that point forward. And there are some provisions that may work that way. But in the way the bill has been written as of now, and if the Senate adopts the same portion of the bill, then that's the way the bill will work as to tips. It'll be anyone who's working for tips in business, okay, they will be able to look back to January 1st. So if you've been paying taxes on your tips, you're probably going to be entitled to a refund. There's hundreds of different obstacles. No one can look at every one and see whether or not. But I would say for the most part, if you're getting tips, and since it's probably not going to take effect for at least 6 months, which is coming up very shortly, then I would expect that you're probably going to get a refund on your tips as of that part of the bill. Now, what is the tip portion? So if you work for tips, that's a lot of restaurant owners, but it's also valet parkers, anyone who collects tips. Baggage handlers at the airport. I mean, think about all the different people you tip, and especially the way the new point-of-service systems are created nowadays for credit cards. I mean, you can have an order for delivery, and or an order for takeout and tip. So there's a lot of different ways, different people that are getting tipped. Now, those people that are getting tipped, the way the law is passed as of right now, and it may not be final, but they have a $25,000 in tips that you can make, and you will not be taxed on your federal income. Okay? I specifically said federal. Now, most states will usually, like for instance in California, they typically go off of what the federal government has passed. But there's no guarantee. In fact, in California, we have an adjustment sheet for things that are passed by federal, not passed by state. So a state, there are 50 states out there, and every state, some states don't even have state income taxes, but there are states that do have taxes. Some of them go exactly what the federal government does. Some are going to have to pass ancillary bills in the state legislature, just like is passed in Congress, to be exactly similar or the same. So this is for federal income taxes up to $25,000. Now, if you make $65,000 in tips, $40,000 of that is going to be taxed if this bill becomes the actual law. So that's one area, right? Another area on the tip portion that you have to understand is this does not affect payroll taxes. What are payroll taxes? Payroll taxes are, for instance, Social Security. Every individual is paying a 7.5% or 7.75% tax that goes into the Social Security fund. There's also, I think, a portion may go to Medicare. There's a portion that goes to typically disability insurance if you get injured during the year. Not a workers' comp injury, but an injury whereby, hey, I can't work anymore. You might be getting state disability, so you're paying into a fund. And also unemployment insurance, which California is called the EDD, Employment Development Department, but in other states they'll have a different name. And these portions of taxes can be anywhere from 9 to 12 or 13%. Well, that $25,000 that's exempt, it's not exempt from payroll taxes. It's only exempt from federal income tax.
Well, hold on. Let me back you up then a second, okay? So, Claire, because you said a lot of things in a short period of time. I'll make sure everybody gets this.
Hold on. Does Jen have the beep, beep, beep when the truck backs up?
No, I don't.
You need it, though.
That's a good one.
We got to back you way up.
Yeah, that's a good one.
So when you're talking about this, where people are still going to have to report those tips, but they won't pay federal tax on them. But when they report them, if their state has state income tax, they're likely to pay state income tax on them, and those will be also recorded as part of some other taxes you pay, such as certain payroll taxes like Social Security, where that goes against the total amount that you would be reporting for your income. Is that correct? So in other words, let's just do the numbers and say I had a $20,000 salary, I made $20,000 in tips, so I would report that I made $40,000. Is that correct?
Well, one.
If I ever made that much money, I would, but I don't get there. But if that happened,
I know. Well, that's why you're working 20 hours a day. But
I know it's an entrepreneurial thing. Okay.
What you say is in fact correct. However, there's a caveat here. Okay, 99% of all companies that I know of, well, not 99%, but most businesses, when you're getting tips, if you have a credit card machine, okay, it's being recorded, right? And so typically, when you get your payroll taxes to the year, you're not self-reporting it. In the original days, it used to be that way, but typically, when you get your paycheck, they know how much in tips you got. So, if there was $300 in tips earned for that night, they have to break it up with the bus boy and the waiter and whoever gets tips, however that breakdown is, and it's going to the employee in terms of, it's not like in the old days where everybody would just get cashed out, whatever. It still does happen to a certain extent, and there are certain cash transactions, but more nowadays with the debit cards and the credit cards, most of this is already being reported. So in terms of reporting, that's the only point I want to bring out, what you're reporting. I think that it is being found somewhere on your system. It's hard to beat the system. I mean, if you work for an individual or you have a business and you're the mom and pop business and you don't have credit cards and everyone is paying in cash, yes, that can happen. I think that's a small percentage.
But that's still an advantage as much as it's a disadvantage that it's being reported, because your Social Security, if you ever get to the point where you'll be collecting Social Security, it will be based on how much money you made. So in a way, it's a benefit.
Well, absolutely, and it is a great thing that we have decided to allow people that earn tips to actually be able to exempt something from, because we're not talking about the people that are working for Apple making $2 million a year. This person who's working on tips, and that $25,000, that's really, really important to somebody. They may be a single parent, they may be going to college. That money for somebody in that range, they really need that money. They're not working for tips. Oh, by the way, there are other entertainers that work for tips, right?
I was just going to say, there's certain professions where we're not going to go there, but
no, we're not.
Yes,
yes. But yes,
it's a family show. This is a family show, yes.
Boy, I don't know how we got to that subject.
Now's a good time for a break, Peter.
You can smack him, Jen. Yeah, you can smack him, Jen. It's okay. I understand.
Yeah. I think it's best we go to a break.
Wow. I can't believe it happened so quickly. All right.
It did. Thank goodness.
Let's take a break. So, for instance, if you buy a car, and, not everybody has cash like Alex, but if you buy your car and you have to pay payments on it, you get a loan, right? If you get a loan and it's a $50,000 car, which actually is not outrageous anymore, and your payment is $700 a month, and $400 of it is car insurance, well, you can't deduct that off your taxes, at least currently. Now, what did this new bill do? So this new bill is giving you a interest deduction per year of $10,000. So pretty much, when you do the math, and I don't know much about math, but I used my fingers and came out with, if you do $10,000 divided by 12, I came out with $830.33. I don't know about the last third, but that's what I came up with. Alex, can you come up with something close to that, or you have a different number?
That's close enough. We'll give it to you. It's close enough.
All right. It's a good thing that I have a lot of hands. I was able to count 833 on my hands, because if I only had 10 fingers, I'd be in trouble.
I had to take my shoes off, so luckily I got that. No problem.
Yeah, well, it's a good thing you're not in the studio, because it would snow. All right, so now, this $10,000 does not apply to everybody. First of all, it's not going to apply if your income for an individual or single person is over $100,000 or $200,000 if you're married. So, once you make that $200,000 a year salary that Alex makes, on a weekly basis, he'd be excluded. But somebody like me who went to law school and doesn't make much money, I probably can deduct it. Right, Alex?
That's true. Now, does that include my tips, that $100,000?
Oh, that's a good one. So it says modified adjusted gross income. So
modified, there we go.
Well, and adjusted gross income. So what's typically included in adjusted gross income that people may not know? One thing is your IRA or 401k deduction, right? They take that off.
Right.
That's all included, right? Items such as that. If you're paying for your medical insurance, right? If you don't get it from your employer, you're going to be able to deduct it that way. So there are various things that come into play. So the way I'm reading this, I would think that and I haven't seen the new tax form, but I would presume that since you're getting the $25,000 exemption, and it is an exemption, that would be excluded. So you'd have to be making $125,000 a year in tips, I would think.
Let me ask the other side of that too, because as entrepreneurs, we're always buying new cars because we wear them out. Well, because we drive a lot of people. So if that's the case, I have a car already. Can I start to take that off of my current car loan, or do I have to buy a new one to do that?
Well, first of all, it's kind of irrelevant. Let me explain. For business owners, if the car is being used in business, it is business expense, and so you can deduct that now under current law. What we're referring to is somebody that doesn't have, they don't own a big, huge company like Alex does, and, who's your employee? What's his last name? What's his first name? Jose? Whatever. Jose works for you. All right. Jose works for you. John, if you don't speak Spanish. And John has a car loan. He bought a Prius because he really likes those electric cars. And so he has a car loan, and his car payment is $700 a month. Well, he'll be able to deduct it as long as Alex isn't paying him over $100,000 a year, right? I don't know how much money Alex is paying.
Not a chance of that. Sorry.
So I think for the average person, yes, we're talking about people. Even though this is a business show, this $10,000 deduction is not going to really apply towards business, because they get their own deduction already. Now, one of the things it says, obviously, this is kind of funny. So it has to be manufactured for use on public streets, roads, and highways. So I guess they're trying to avoid the
golf carts.
The golf cart. And then the other one is it has to have two wheels. So I guess your unicycle won't work. You won't be able to deduct your $10,000 unit, right? Because it has to have two wheels.
My Meg Lift unit with no wheels, or possibly my tank that only has a track. I can't use that either. Huh? That's a problem.
Well,
it's been a problem.
You just hit it. Maybe there's a one-wheel tractor.
Wow.
All right. Now, here's the big one. So, and it applies basically to almost any car, because it's a car, minivan, van, sport utility vehicle, pickup truck, or motorcycle. So that's pretty much anything. Now, also, here's the big one. The final assembly of which occurs in the United States. So
that's the big one right there.
This is where we get into MAGA, right? Make America great again. Well, how are we going to make America great again? So this deduction doesn't apply to everybody. So, you buy Alex goes out all the time and he buys the brand new Porsche that's made 100% in Germany and assembled in Germany. Guess what? Alex won't be able to get that $10,000 deduction. So that's another problem, right? And then to top everything off, which I find this comical, but I'm a sarcastic person. It says the deduction is allowed from tax years 2025 to 2028. Well, unless you get a 3-year car loan, you got to think about it. That's another perspective that only we would figure out, right? So I got a 5-year car loan and it expires in 2030. Well, I may not be getting that deduction for those 2 years, right?
Well, many of those people who are making under $100,000 a year, they're looking at 7-year and 10-year car loans now. It's crazy. So,
exactly.
This is crazy. Yeah.
So, I mean, there's always a catch, right? Nothing's ever slam dunk. There's always...
Wait. You're telling me the government doesn't make everything really easy for you?
Hey, listen, my favorite...
I never heard that before.
My favorite day of the year is the day I have to go to the DMV. I can't wait. It's my favorite day.
Oh, I know.
And I get in and out so quickly, and I'm just laughing my whole time. It's like it's the most efficient thing in the world, right?
I go there weekly just because I enjoy paying. Oh, did I say that out loud? I'm sorry, I didn't mean that. Yeah.
Don't worry. We decided we're going to increase your taxes because we thought that would be a good idea. Oh, my God, we're almost ready for a break. All right, so I don't know how that happened. Anyway, we're going to start a little early because we want to listen to our sponsor, Legal Steps. You listen to KHCS 1220 and 98.1 FM, the S. Brien Show. And now a word from our sponsor.
And we want to say thank you to our sponsor. It's LegalSteps.com, spelled LegalStepz. That's with a Z. And when you log on to LegalSteps.com, you have finally decided, you know what, I've got this awesome idea, this great product, whatever it might be, and you want to start your own business. You are brand new at this, and because you're green, the experts at Legal Steps are the people that you need to talk to. They will kind of walk you through each course, and you've got nothing to lose because they make it so simple. As you're going through the courses, that you're answering things the right way. You can have like a screen in screen, like a picture in picture. And so as you're going through the course, you can see what your expert's looking at. So you know that, oh, okay, cool. I answered that question the right way because that's what the expert just did. So it kind of takes the guesswork out and makes it super simple for you. The courses that you can take: register a trademark, form an LLC, form an S corporation. And it's super efficient. I took the course just to kind of have an idea of what I was talking about on a weekly basis. And I was able to do that in less than 2 hours. I picked my own time. I chose a Saturday morning. It was nice and quiet. and was able to cozy up on the couch and get the work done. And if something came in, the dog or the kids or something interrupted me, I paused it. I was able to rewind it. I could take notes. And so it was great working on my own schedule, not someone else's. I didn't have to log on at a certain time right in the middle of trying to make dinner and pick a kid up from school or whatever it was. So legalsteps.com makes it so easy that you almost can't say no to this. The courses are super affordable, under $150 each. And yes, everybody's talking about how the economy is right now and things are tight, but $150 in the long run for you to finally do what you've been wanting to do for so long, that's nothing. Again, go to legalsteps.com, legalstepz.com.
Wow. Thank you, Jen. Thank you, Legal Steps. We're back to the Ask Brien radio show on KHS 1220 and 98.1 FM. So now that I think we kind of went over tips and car loans, now we're going to go into something that really affects business owners. So if you do not have an employee, if you have an independent contractor, and we're not going to go through the whole analysis of who is an independent contractor and who is an employee, we'll have a separate show just on that. But if you are being paid as a 1099, the company is required, anyone who receives over $600, they are required to send out a 1099. And that's the current law. However, under the new act, if it becomes the official law, they are increasing that not only from $600 to the new amount of $2,000, but they're also increasing, including an inflation gap. What does that mean? That means that if you have an employee, so, Alex has 5 people there, and he was paying them, $900 or $1,500, they worked, they came in and did inventory checking, so they want to make sure, hey, we've got 7 or 6 of that item, because Alex has a big company like that, and so he wants to check on the inventory. So he may pay that guy Miguel or Pedro or Sanchez, whatever. He may pay them $1,500, $1,800. Well, under the old law, he'd have to file a 1099 for that person. But now the law has changed, and it's $2,000. But there's even a bigger one, a bigger extension. So depending on what business you are, you may be in a business where, you're operating through PayPal or one of these companies, and there's a new Venmo, and it recently became the law where you have to file your 1099s on all the vendors and all the people that are getting money. Well, they've increased that significantly to $20,000. So that's going to help you. This is all going to help you on accounting because you're not going to report everything, every person, whatever, only the bigger ones. If you got 15 people that are making $1,200, that's not as big a deal to the government. But if you've got people making $2,000, then they want to know. And that's a very, very big item that's part of this tax bill. There's a lot of other things passed by this tax bill, one of which that we haven't got into yet, which is the overtime. We talk about tips, but there's a lot more people that are working overtime, especially to buy a house and a car nowadays, and are working overtime. And that, too, is going to be part of the bill. So that, too, is going to be very, very beneficial because previously overtime is taxed 100% just like tips. Now, interesting, so what if you're a waitress and you get taxes and you work overtime, tips and you work overtime? You can really, really get a big savings, right? So the initial law was no taxes on overtime. However, they're going to expand that. Now, it's not going to, again, be available to everybody, okay? But there will be people, and of course, it's only available, both the tip bill and the overtime bill is, again, only available through 2028. Of course, a bill like this that is only available through 2028 will not really survive. Why? Because people are not going to take away a benefit like that on tips or overtime. It's kind of what we call political suicide. no one, Democrat or Republican, wants to say, "Hey, I'm the guy that forced people that were earning tips of $20,000 a year, or making overtime $10,000 a year, so they can live in their in their dream house." Good luck trying to take that away. It's always harder to take things away from people than to give them things, and that's part of what this bill does. Alex, do you have a question on that? Because
I think it's a fantastic thing. I just hope we're going to get into what might not be perceived as great, because everything you're saying so far, I am just extremely excited about, being a business person and a human being that pays taxes. But what's not so great, maybe we can talk about that as well.
So we're just going to quickly go into it because we only have about a minute left. But most people know Kevin O'Leary. He's been on the Shark Tank. He's had done a lot of things over the years, and he came out with a report. Basically, if you received one of those PPL loans, one of those loans during COVID for your employees, et cetera, okay, normal audit period is 4 years, and the IRS can go back 4 years to check on that. But this bill is expanding that, according to Kevin O'Leary. I haven't read that yet. That it's expanding the time that they can audit for 9 years. So basically, if they don't get to your tax return until 2030, and it happened in 2021, well, they can audit your PPL account way back then. So that's going to be really interesting, and that is not good for a small business owner, because the last thing anybody wants, the last thing anybody wants is an audit, but a business owner as well. Business owner can't be dealing with an audit while at the same time trying to make business. And if they're not making business, then they have a hard time not only supporting themselves, but the 3 to 10 to the 1,000 people that work into that company. Everything has to stop, and they're not making the same amount of income. So it's really tough, really difficult situation for the audit. But we got to take a quick break. You're listening to the Ask Brien Radio Show on KCS 1220 and 98.1 FM. We'll be right back. Passed by Congress that affects people that are filing taxes. And by the way, one small quirk is the tax rates that have been around since 2017 under the Trump Act will continue in place, presuming the bill becomes enforceable. Now, even though the rates are staying the same, if they did not change the law, everybody would technically be getting a tax raise. Why? Well, because the tax rates were higher prior to Donald Trump's tax bill that was passed in 2017. And so because of that, you would have seen an increase in your taxes, or will, if for some reason there's a holdout and this bill does not become the law. I can't imagine that ever happening, but that is a quirk. Now, as part of the law, and this affects small business owners, it does not affect specialty services. So lawyers, doctors, accountants, certain specialty services have never been included in the bill. But for the most of the situation, if you own a business, okay, you own a corporation, an S corp, an LLC, you will get a 20%. Currently, under the 2017 bill, you get a 20% deduction that you can take after you come down to adjusted gross income. However, this new bill, as written, will be 23%. So let's use the example. You make $100,000 is your net profit. Well, in 2016, you'd be paying taxes on the $100,000. In 2017 through today, you would get a $20,000 deduction and be taxed on the $80,000, 100 minus 20. The new bill is increasing that even further. So now you're getting a 23% deduction. Thus, instead of paying taxes on the $100,000 or $80,000 as now, it'll be reduced to $77,000, the additional 3%. So that's another benefit for a business owner. That's why most businesses form an LLC or an S corp, because that really designates you as a corporation or LLC to take that deduction. There are certain people that the government feels that, hey, they're making good money. They're lawyers, they're dentists, they're accountants, they're highly successful people. And so for those, they're not going to be able to deduct that deduction, but they never have been. So it's really not going to change much. But that is something there. The reality is, it doesn't matter what side of the political spectrum you are. The fact of the matter is, to not allow this bill to be passed would be a significant tax increase because of the tax cut that happened in 2017. Whether or not you agree or disagree, whether or not you feel people should be taxed or not taxed at a higher rate or a lower rate, the fact of the matter is everybody's taxes would go up if this bill does not become the law. And right now, the only way this bill can become law is if the Senate passes it exactly in the same format, which we sincerely doubt will happen. More than likely than not, the Senate will want to put their 2 cents in. They have an ego, and they'll want to change something. And that's where the only part of this bill that is quirky or not quirky, but may or may not become the law, will come down to that. Whether or not the Senate changes it in any manner that would affect the people that voted for it in the House of Representatives, how that happens. And that's really where the story is. So it was important to get one portion of this bill passed, but don't think that this is the law. This is something that is currently very likely to become the law, but probably there's going to be an amendment change, something, and that could change everything because the bill only passed 215 to 214. You only need one person to change their mind. That's pretty easy, one person. And worse than that, something could happen to that one person. So if the Senate passes the bill and something happens to one person, well, guess what? Then it's a tie. Didn't think of that one, did you, Alex?
No, I'm just sitting here, my brain's hurting thinking about that one. That one's a little scary to me right there.
Well, unfortunately, I didn't have a lot of things to talk about today, so that's why the show was so short. But you're listening to the Ask Brien radio show on KHS 1220 and 98.1 FM. Peter Bronstein, along with his co-host Alex Grossman, and our super duper califragilisticexpialidocious engineer Jen, signing off.